Welcome to Wall Street Confidential. I'm Farnoosh Torabi. This is Jim Cramer, co-founder of TheStreet.com. Hello, Jim. Let's talk about oil, the best case scenario,
Right.
Gasoline. You think we should perhaps bet on declining gas prices?
Well, gasoline is a function of the gross margin, the so-called crack spread between how much they can refine it at and how much they can sell it. And that has historically been a cyclical business. It is not a secular grower. Even though we haven't built a new refinery in a long time here, there's been a lot of additions to refinery capacity. And periodically the gross margins get really thick, get very fat, and typically that's because of outages. That we have enough refining capacity to do the job. It's very difficult to import refined gasoline. There's just not enough margin. We had a lot of outages in the month of May. So I felt that's why I've been saying that gasoline peaked. It's not summer driving demand. Summer driving demand is a cyclical trend. Mm-hmm. What has really been cyclical is whether there's a lot of refinery capacity it's up or not. A lot of refining capacity coming back on after outages. So I think the margin goes down. I think the price of gasoline has peaked. Now, let's differ from the price of oil. Oil is in secular increase, and that's because despite what a lot of these people who aren't doomsayers, oil's in the wrong place. And oil is one of the reasons why I own RIG, and I still continue to like it in Global Santa Fe, which I don't own for ActionAlertsPlus.com, is that oil's in hard places and deep places. And the long-term trend is for increase in oil use. All of the different alternatives that we hear about are nothing. They're absolutely nothing. There was a good article in Florida Trend magazine, by the way, about how coal is always going to be in a bull market. And but because of the environmentalists, coal cannot trump oil. It's interesting because that was the one way to get out of the jam, but because of the greenhouse situation, we can't. I would emphasize that the long-term trend in oil going up is bullish for an XTO. Mm-hmm. There have periodically been oil companies that sell at 7 to 9 times earnings. You can buy them on the long-term secular trend. But if you look at the actual growth rate of most oil companies, the integrateds, is not that great. The reason I like XTO is because they find oil, they find natural gas, they produce it. Natural gas, they can. The futures are at $9. You can find it for $2. Mm-hmm. So 9 minus 2 is 7. That's a lot of gross margin. Secular trend in natural gas growth. Secular trend in oil growth. Cyclical trend in gasoline down.
Finally, if gasoline does reach its peak, you mentioned that who wins exactly? Six Flags, for example, or Disney?
Cracker Barrel. Cracker Barrel's probably the most levered. Cracker Barrel's been buying back more than 25% of its stock. It's an interstate play. Cracker Barrel is the pure play on gasoline going down.
All right, thanks a lot, Jim Cramer on Wall Street Confidential here on TheStreet.com TV. Thanks a lot.